First, let's talk about FANG generally, then let's go to Facebook specifically. So here's a chart of FANG over the past 2 years. No drawings, no judgments. Let's put in something and see what we can find. So here now is the same chart. And what we know, of course, is that this has been almost perfectly on trend over and over and over. It has found this trend line. And what's happened now is just what you see here. We have essentially broken trend. Not good. Let's go on to another chart. Now it's the same thing, FANG on top, but relative performance to the actual market. And I want to zoom in here. If you see this, we have held above this line. Now, compare that, however, to, well, maybe we'll go back one if we can, but if not, compare that to the where we haven't broke trend. So take a look at this. We are now below. Relative performance to the market is everything. This was a huge outperformance, which is now not attracting capital. Moving on. Let's look at this comparative chart of now Facebook versus FANG. So FANG is starting to underperform the S&P, and Facebook is starting to underperform FANG. You can see that here. Facebook in blue, FANG in orange. And then let's draw some lines. We have this epic, and we know it was epic, sell-off on record volume. And Guy just referred to that. And then we try to make a new high, and we have another epic sell-off on heavy volume. The biggest one-day loss of capital in the history of markets, 120 billion with a gap. The odds of exceeding that high are exceedingly low for years.
Carter, for those people invested in the communications services sector, the new S&P sector, is this going to be the weight that causes underperformance of that sector relative to the new tech sector, relative to the S&P 500? Right.
One of the issues, of course, is, and the bull would say that, look, it's already down 27%. In fact, there's rebound potential. But again, sentiment is broken. And for this particular security, to have a reset like that, it's very hard to overcome it. So to your point, it could very well be the problem for that area of the market.
Question for the desk here. The money that comes out of Facebook, where has it gone, or where will it go, in your theory? We've talked time and time again about stocks that are very crowded. They're used as an ATM, and the money goes elsewhere to another company's benefit.
I would have thought originally it would have went into Twitter, because Twitter suffered so much earlier than Facebook for a lot of years and was not seen as really the grown-up at the table Facebook was. So when it originally came out, it went into Twitter. But then when the whole social onslaught happened on Capitol Hill, I think they're coming out of all of them, resetting, probably going into a different sector, different space. I think they're probably going into
so it's part of the whole
industrials or healthcare.
What do you think, Tim?
Well, I think there's a scarcity of investment plays, certainly in the social media plays. So what is Facebook? It's a media company. I think, first of all, media companies are going to be thought of differently. I think even Netflix on some level gets if you're telling me that there's at least some substitution effect, or where would we see Facebook flows go if it's a zero-sum game? I don't think investors are looking at it like this. And again, I think investors need to think about how they're approaching those companies that deal with the governance issues around data privacy, because this is going to continue to be shining in their face.
Should we impute Facebook's problems onto the rest of the social media sector? Any company who traffics in data?
Can you explain to me what impute means before I answer the question? No, I think each of these companies have their own specific risks, right? I think Facebook has its own existential risks. Netflix is it a wide enough moat? Is competition coming in?
But how about a Twitter, a Snap,
Google? See, I think
Amazon,
Twitter's different.
Google.
I think Twitter's much different than Facebook. I think it's getting sort of lumped in with Facebook, but then that's what the market wants to do. And I got one more point. Carter just walked back on his own without you asking him. Is that like what happens, or?
Well, I'm not going to not invite him back to the desk.
I don't know what the protocol is.
You referred to that March low. Do you think we're going to undercut that March
Yes,
low?
I do.
I agree.
Wow.
So think of companies that use data to make your life better. I think Google is in a little different position. In other words, I think, when you think of winners and losers, and I certainly think Amazon's a winner on some level, even though I think they have regulatory issues, it's the companies that are basically using data to improve your experience or sell you services. I think those guys are in a much better place.
Do you think the fine members of Congress are going to see it differently?
No.
But this is, to me, okay, so this to me is all about how investors perceive it. Shareholder value, corporate C-suite, how they're handling it. The regulatory issue is going to, that's not going away, okay? That's going to continue for a long time.
I think that, to Tim's point, you could classify those to Amazon and Google, because Amazon searches, in theory, should make your life better, or they're there as a tailwind to whatever consumer issues that you're dealing with. But they're not going away, and they're not going. They might be masked into midterms, but they're not going away.